Tesla has finally broken through that massive liquidity level of $290 that we have been covering here for the past couple of weeks. Today, we saw this push through that level. I ended up closing some of my profits and some of my calls, specifically these shorter term June 6 calls that we were talking about last week for a 123% profit, which is absolutely amazing. And my goal in this video is to share with you guys, number one, why we took this position, two, why I closed this position if I still think Tesla has some room to run, and more importantly, where I think Tesla is headed in the next couple of weeks and next couple of months, because there is a chance that this could at least push up another $30 to $40 by the end of this month. And there's a good chance that we could actually see all-time highs within the next couple of months, and more specifically by the end of the summer. Now let's talk about the position first. Take that part out. Now, if you want to learn our exact trading system completely for free, step by step, our entire masterclass series going over all 11 courses in sequential order will be down in the description. There's no credit card, there's no BS. It's legitimately free. I need nothing from you. And all of the indicators that we're talking about in this video will be down below. Now, the position we took specifically was June 6th, 2025, $340 calls. I'm also still holding December 2026, $350 calls. So even though this position is closed out, I still have exposure to the upside. Now, these calls specifically, we ended up entering here on 5-1 and then averaged down with another 60 on 5-5 and closed this position entirely today, as we said, for a $67,000 profit, but more importantly, for a 123% profit. The reason that we took these calls specifically is because we saw massive, unusual options flow coming into the market over the past couple of weeks for Tesla. I've been posting this obviously within our Discord community on X, and we even talked about this in the YouTube video that we made last week. And we've seen a lot of calls come through, but the main ones that I was watching were these 6-6 $300 strikes. This was about $15 to $17 million worth of calls. These came through on 5-8, so May 8th. And that's why I decided to follow. Now, I want you to understand that just because there is unusual options coming into the market and unusual order flow does not mean that we're going to take a position. This is just another piece of evidence or confluence that we will add to our analysis. And if you are somebody who wants to learn just about reading flow, at the very bottom of our free masterclasses, you can take the Options Flow Mastery course, which will explain in detail what exactly all of this means and how you can read it on your own. Now, at the time, price was compressing here for multiple days up into that resistance level. And we know that the more times a resistance level is tested, the higher of a chance we have to actually take that resistance level out. And so another piece of evidence or confluence, as we said, is that while price was pushing up against that resistance level, we saw a ton of calls entering into the market. Now, as we said, that course will show you how to read this in detail, but what's very important is the fact that these were confirmed. These all came in at the ask or above the ask. So this was not somebody who was selling covered calls. And once again, just because this happened does not mean that the stock had to break out. Historically, year to date, we only have a 55% win rate. But what's more important is our risk versus reward, meaning how much are we going to get paid on average if this works versus how much are we going to lose if this doesn't work. And the example that I like to use when thinking in probabilities is just sit here with a quarter or a coin. Flip the coin 100 times and track how many times is heads, how many times is tails. And imagine that whenever you are hitting heads, you are making $100, and anytime you hit tails, you are losing $50. This means that we would have a historical risk versus reward rate of 2 to 1. And you'll notice if you flip the coin, you're not going to be right all the time. You might hit 6, 7, 8 loss streaks in a row. But what's more important is if you have the ability, aka the mental discipline to risk appropriately, then you will be able to withstand those drawdowns that are inevitable. Now, bringing us to where we are right now for Tesla. Our initial target was $340 to $350, and I still think that there is a chance that that could happen within the next couple of weeks. The reason for that is that now we've pushed through this resistance level, you will see there's a very thin area on the volume profile, basically from $340 down to $290. When we have a thin area of volume on the volume profile, this means that it is very, very easy for the stock to move within that level, whether it's to the downside like we saw here in February, or to the upside like we're seeing recently. From that point, these block areas, basically from $350 to $335, will normally act as an area of resistance. And if we're able to take that area out, we will fill the thin area of volume up to $408. Now, as we said, the reason I closed out those calls today was because they expired in June, which is just about a month away. And I decided that the smart thing to do was close out the position and manage my risk. Now, there are a couple of ways that I look to manage risk. The one is called rolling an option. So let's say that after a day like today where the stock is up 7% and I have something that expires within the next couple of weeks, I will cut the position entirely, then open another position with the same position sizing as the original position that I took. So not a position that's now worth $80,000 to $100,000, but instead with the original size that I took the first position with. This way, if the stock pulls back to where my buy entry was, I'm still making money. And if the stock continues to rally, I'm still making money. Now, I'm not going to make as much money as if I would have held those initial calls, but I'm also reducing my risk, which is one of the most important things that we cover here each and every single day. And in this case, I could have closed out those June calls and maybe went for an expiration for August or September 2025 with a strike price of $340 to $350. And if we actually look at the most recent flow that came through this morning, this was still very, very short term. So I felt that even though there's a lot of upside at this point, I don't feel like I need to chase anything. I'm already up $500,000 year to date off of 1.3 million. So there's no reason for me to force anything at this point. Now, with that said, I still think there's a very good chance the price is going to continue to expand to $340 or $350. And if that happens, I will do more than fine. I have those December 2026 calls. If price rejects prematurely and comes back to test $300, then I can just take the profits that I made from this trade and average in to the December calls or open up, like we said, August or September calls. If we zoom out to the weekly chart as well, you can see that there's not a lot of volume from 300 up to 400. So there is a chance that we actually go parabolic from this point and actually push up to $400. But understand that because we have this weekly chart in play, this is going to take significantly longer to play out, most likely 2 to 3 months. And when I'm looking to grab options, I'm normally looking to double the time till expiration. So if I think this is going to take 2 to 3 months, I want to double that, taking 4 to 5 months till expiration. We explain this all in detail in the options beginner course down in the description. Overall, this was a beautiful play, and I still think that there is a lot of upside for Tesla. And there are basically two things that has to happen in order for me to remove my bullish thesis. Short term, the daily BX, which is now green, you can see down here it's showing expansion, would have to turn red again. That is normally short term when I will look to close a position or at least start to scale out of it. The secondary thing is that the weekly BX trender would have to close red, much like it did back here in January of 2013. And once that flip happened, price sold off aggressively, basically 50% down to that $220 level. And now before I leave you guys, I want to talk about the importance here of position sizing and risk management. I have had a lot of money in Tesla over the past couple of months. But understand that in the past 2 years on Tesla alone, we have made $1.8 million. So even if I would have lost the entirety of the call options that I had right now, which was about $40,000, it would have been a microscopic blip in the profit and loss on just Tesla in the past couple of years. I am not here over leveraging my account each and every single day. I've been doing this for 11 years, and yes, the numbers that I'm using are massive, but relative to my fund and relative to what I'm currently trading, it really wasn't much at all. Now, our realized profit for the past 2 years is 4.7 million, but at this point, I'm only trading with about $1.3 million because obviously this is not including taxes, which suck, but we have to pay them. And more importantly, once you get into a wealth building phase long term, you need to focus on de-risking your trading at least a bit. I have Zapier post this position sizing guide in our Discord community each and every single morning to not only remind all of the students within the mentorship group what proper position sizing looks like, but to remind myself. And one of our golden rules for options is that your max position per trade should be 5%. So if I'm trading with $1.3 million, for easy math, let's just say $1 million, then that means the max position on an option that I should have is 50 Gs. And that Tesla trade met those requirements to perfection. And so I hope you all had a great day. I hope you all profited from this trade. And as always, it doesn't mean that we're going to profit from the next one. But the important thing that we talk about and preach each and every single day here is that it's not about making money today. My first 5 years trading, I made goose egg. I would bring an account from 10, 20, 30,000 up to 60, 70, 80,000 and blow it all within a month because I was not following my strategy. I was not following my position sizing. And I can't tell you how many nights I actually cried myself to sleep over it and hated myself for it. But because I was able to stick through it, and now I'm going on 11 years, there are days, much like today, where I make in a single day what I lost through my entire career prior to this. And so the goal is not to make money today, it's to stick to the system and to play the long game. From the bottom of my heart, guys, thank you for all the support, and I'll see you tomorrow.